Hi, this is Boris Schlossberg, and the biggest story in the currency market today is the Canadian dollar, where the Bank of Canada held its monthly interest rate decision policy meeting and raised rates by 25 basis points as expected to 1.25%. However, despite the fact that interest rates were raised, the Canadian dollar actually fell on the report because the market became very concerned over the fact that the BOC may be doing a one-and-done interest rate hike. The biggest problem within Canada right now appears to be political rather than economic. Bank of Canada went out of its way to say that generally growth and economy are operating at almost full capacity, and that inflation is moving towards its 2% target rate, therefore suggesting that it should continue raising rates in the near future. However, it very much cautioned the market that given the uncertainty around NAFTA negotiations, it is very likely going to take its foot off the pedal and pretty much stay stationary for the near term, at least until there's much bigger clarity on trade negotiations. The NAFTA deal seems to be the one big issue that is hanging like a black cloud over the Canadian dollar for the time being. It's very difficult to see whether the currency pair is going to rise in the near term unless that political risk is lifted, because 80% of all Canadian exports go south of the border to the United States of America, and any kind of a scrap of the NAFTA deal would have incalculable damages to the Canadian economy. However, if the NAFTA deal is reached and we see some sort of a compromise with the Trump administration, that should really lift the Canadian dollar and possibly push it all the way up to 83 cents by springtime, as the Canadian economy appears to be operating on full cylinders and the Bank of Canada is going to resume its rate hiking operations. This is Boris Schlossberg from NYMEX, and that's the biggest story in the currency market today.